Well, hi there, everyone. It's Wednesday night. It's pretty late. We'll record this until it's basically Thursday, October 20th, and the start of the day. It's a stock market video, but it's also a video about what's going on in the world and just commerce in general and theory. I like to talk about companies and watching the stock market is, I mean, it's the 9:30 to 4 p.m. gamble of the day, kind of about what's going on in the world and different companies move and there's ways to trade things called stock options, which I don't always kind of go over all the theory behind all that all the time. I kind of like to just talk about the companies and what's going on and throw out a target price that you can work around. But um, anyway, I every day now, when I get a chance to, and today was one of those days, I go through the top 10 companies that are at interesting prices, like low percentage of their target prices, like Tesla. Tesla's actually down to like 208 after hours after they reported kind of a clunker on earnings and their sales and deliveries not being as much as I guess they had anticipated. So the market's not reacting to that. I love Tesla. I'm still getting a Tesla. Like this is still the car, even though there are other electric cars that are also awesome. Tesla still is in its own universe, and they're going to continue to get better. And just yeah, they can't make enough of that awesome product that we all want. Yeah, nobody has a Cybertruck yet because they haven't finished it yet. But perhaps they're working better with quality and refining their manufacturing process and waiting for gigapresses to really start working and doing those things. And you're just seeing a ramp up time. So I'll be buying that dip and buying some options on that because they'll go down for a little while, but then they're going to go up because they're an awesome company and they're a long term. I mean, yeah, you start to see them now down to here. Like, I mean, I said the number of 210, I think a week ago, last time I did a video about this. I was like, I think they could go as low as 210. They're opening at like 208 after the hours trading in the morning. they there's still a little bit left to go, and I think they can go to like 200. But then when they do that, and then some good news comes out, like people start to digest some of the better news, and they just feel like they hit this floor. I mean, let's look at the year trend for them, and we'll start to move on to other companies. I mean, whoa, right? Like, whoa. that's that's never before seen lowness. Well, okay. You got to go back 2 years to get to where they are right now, I think. And okay, are they the same company they were 2 years ago? No, I've seen a lot more Teslas on the road now. So I will be buying this dip, and that is that's good advice for number one. I don't know how long that option has to be. You always want to make it at least a quarter if you really want to be able to ride some trends. But I'll do crazy stuff like buying one that expires on not for this Friday, but like next Friday, because they will not stay down for long. Moderna has a terrible day. Yeah, a lot of these stocks that were related to biotech and stuff, advanced like new biotech got hammered. There is an overwhelming issue with the market, and one other thing I want to talk about in this video is not just the main companies that I have on here that I talk about more frequently, but every day now, in order to shrink this list, because this list is still at 709 companies on here, we've got to get this list down to a list that we recognize basically almost every company on here. And that's a list of, I think, feel like a couple hundred companies at the most. So during the day, what I'll do is I'll sort this and I'll look at who had the biggest day and what company were they and what happened, and I'll go and I'll look at the news. I actually did research them today, and my comment on them would be, yeah, they are still, you know what it is, they aren't kicking people out like they said. So I have an account with Netflix. I pay that still because it's still not that bad. It's like $9 or something, right? $9.99 maybe. It's still like throwaway money sort of, and I do it because other people I know use it. I have multiple accounts on there that are in different states and different people and different sexes, like there's different everything using that. And it's funny because I could care less. Like, what are you going to do? Netflix ban my account or ban somebody from using it? They don't know who owns it because I never use it. I don't have Netflix. I don't even, I cannot name a show on Netflix except the one where they're redoing the Karate Kid. You know, like it's the new Karate Kid. What is it called? It's the name of the dojo, right? I can't even remember, but I've seen Ralph Macchio aging, and it's okay. Now, point is I don't use it yet. I'm still paying. So they're not losing the subscriber base as much as they thought they would because they claimed they were going to kick everybody out. You know, like you can't multi-account like they should. But now, you know, like with the internet, it's still weird. You know, like people are using VPNs and watching stuff, pretending like they're in different countries, and there's nothing, there's like nothing that they can do about it because it's like either I guess you could restrict service to anyone who's using a VPN but you don't always know if they're using a VPN. It's a crazy problem they have. Anyway, they had a great day because the sky's not falling with them apparently today. Now they are a profitable company, and yeah, they're still, I guess, an entertainment staple. So people are realizing that. I don't know how much more they have to go. I have a target price of 200. I'll raise it to 250 because that did happen. I actually reviewed that and I was like, well, wait a minute, what happened? I was like, oh yeah, why are they not dropping off a cliff with users? Because yeah, they're not kicking me out. I'm still paying them. All right, moving on. Intuitive Surgical, another one that it will always rebound, but like Tesla in a way, it's a rebounding one that will continue to go up. I don't remember too much about this Richardson Electronic, and it's too small. So I almost want to say it doesn't need to be on here. I'm sorry, Richardson Electronic. You don't need to be on here because you're too small. Very small, but microwave technology, short interest is super low, but I'm just getting rid of them. So this is how I start to get that list down is companies that I would never really give you advice and say that you should short them or long call them, which are the options terms for the kind of things you would buy on this to try to turn an idea or a thought about a direction a company is going to go into the most amount of money when that thing happens. And so what do? Right? Well, as I browse and I try to review every single company that's in the top 10 of whatever I'm sorting by. So in this case, we're saying the biggest movers that were up today were Netflix, Intuitive Surgical, that are on our list, not in the entire market. They're just of what's on our list. And our list is not going to include most of the companies on the market. It's going to include only the companies that we want to follow for reasons that I will go over as we talk about them. So the rest of these, Adobe, I don't like Adobe, even though everybody has to use them. Not too much of interest in the upside today. There was a little more interest in the downside because I caught a lot of overreactions, I think, here in certain things. And I also caught home builders, which I do not think are overreactions. So we'll get into that. So here in Generac, their year-over-year estimate not going up was what made them drop 25%. But that's because last year was unbelievable for them. So year over year, I kind of almost understand. They're still fine. So this is an overreaction and they'll go back up. I'm not going to put a target here because I don't know the company that well, but based on what I just saw, they're fine. Repligen, I need to put the comments on this one, which I forgot already. But point is the home builders. We'll talk about those. So what is happening now with interest rates and with a whole bunch of other, I mean, I can't just say other factors. You have to be really specific when you're talking about the market because you have to have reasons for everything. So because you're believing there are reasons for everything, which is why you're able to kind of calculate with some degree of certainty or significance that you'll know which way a stock is going to go in the short, medium, long term as well. Well, here's the deal with home builders. There are a lot of companies that when the housing industry was at its peak, I would say a year ago, about when interest rates were still low and everyone was selling and making. This is the thing about housing. It's so addictive, right? Like you have a home, you've been paying it off, all of a sudden it appreciates 35, 50% of value in like 2 years. And your neighbor's house is going for $300,000 more than you've ever heard of before, right? And so people take advantage of that and they sell and they turn that into a nest egg and then they get a new home and they buy the new home at a premium because the market got like that. And then all of a sudden interest rates go up and then it becomes not as advantageous to sell big properties and pay big interest. And so things slow down just as fast as they ramped up even faster. And these companies that went up a lot during the heyday of that a year ago are now realizing that they're longer term out because they're home builders. Like it takes a while to build stuff. And these are projects that last months and years. And so you start to see them go down, and those are the ones I think are going to continue to go down because the short-term outlook can't really change all that much because interest rates are not going to all of a sudden go from 6% down 6.5% or whatever they're at, like back down to 3%. It's not going to happen in 6 months. It's not going to happen in a year. And it would be amazing if it happened in under a couple years, actually, because there's a reason why it supposedly got raised. We had to slow things down because everything started going up like crazy because everyone's real estate and everyone's rent was super high. So how do you change that? Well, it's an interesting question, but in the near term, the home builders and that type of also like discretionary home building spending, like no one's putting extra money into real estate thinking they're going to turn around and make it more right now. And so there's another one, was pool, I think it is. Yeah, pool. Bad timing. Yeah, I got to color the bad timing. What color should we make bad timing? Because this is a company that we're going to want to buy a put on. I saw this and I was like, ooh. Ooh. I was like, oh yeah. And what I mean is, let's see, conditional formatting. So we want we're going to add a rule, and we're going to say that text that contains bad, oops, text that contains bad timing. We're going to make that, and what's a bad color? I mean, red is bad. I'll do like a maroon with a yellow font or something. So yeah, basically bad timing means that a company that got a little extra money into their valuation during when times were good because they did have great financials like Pool Corporation, which last quarter looks phenomenal when you look at revenue and stuff, but they're finishing off jobs that are not getting renewed, is my guess. Or jobs that they had lined up may not end up happening, stuff like that when it's new. But they also have other business. They're not going away completely. They're not going down to nothing, but they have so far to go down. This is the thing, right? And I almost want to put a 1 here, even though it's not a 1, because I want to show you what this looks like in the chart. So all the ones that I have 1s on here are companies that I'm saying to short. So they automatically now roll into this comparison sheet where we get to compare things like their chart and also how much they're traded and what their market cap is. So here you've got an $11 billion market cap. Okay. They're $298 a share. So when there's duty in the pool, they're going down a lot. Hold on. So let's see, over the last year. Yeah, see, people are realizing this. Even though the financials are not bad, it's just sad because you can tie a company like this to home building, to new investment real estate, to large purchases. It's one of the reasons why they have high margins. So yeah, I just see them to continue to go down, and that's why you can put a reasonable target on them, a quarterly target of 250, because they can't win. Like they can't win right now. All of a sudden, we're going to want to do new pools. There'll be another virus, and nobody wants to get into a pool too, right? Like how much your pool's getting used. I mean, I'm not gonna lie to you. I was in a hot tub on Super Bowl Sunday during COVID at like a Tennessee hotel. Like I didn't give a rat's ass. But the point is, I still think that this company has bad timing, and you can buy puts on them. And so it's finding stuff like this when I'm sorting through the stocks every day that really makes it interesting. Yeah, and so Moderna is getting cheap because this is a future company for sure. I mean, the news that is not getting digested in their stock is like, oh yeah, we're partnering to figure out how to like do vaccines for skin cancer and vaccine for other cancers. And like, what? What's that? Oh, do you have a family history of a certain type of cancer? Oh, we're going to shoot you up with some stuff that expresses the proper things in your genes so that you don't have those cells go hyperactive and cancerous. Yeah, yeah, we're getting to the mathematical analysis of cellular biology that they are apparently, like, in a way, they pioneered certain elements of it with mRNA technology, with messenger RNA, but they're now extending it to, customizing expression of cells and stuff within the human body. I love everything about this kind of company I would actually work for. I was thinking about that today. I was like, I really want to design an Excel sheet, or a Google sheet that is a pivot table of a lot of inner workings of cellular mechanics and human body and anatomy and all kinds of things that I can imagine building a file. And I go, these guys are doing it. They came up with a vaccine in like under a year for COVID. I mean, like, we do live in the future. I mean, that's one thing that COVID did, is it brought us into the future where now we expect tailored vaccines to come out within 6 months. And, like, fascinating that we now, it almost just like happened and we're all kind of okay with it. And now, and their stock doesn't continue to skyrocket. So when I see an idea like this, it makes me want to buy a long haul on them. I have them at 150. They're well beyond that years from now. I mean, way, way up. What else? That's what I want to talk about today. I want to talk about, I want to talk about buying puts on home builders. I always like to buy puts on Roblox. They're a horrible company, and they will continue to go down like this. DraftKings doesn't have a lot of value left in them at 13 shares. I don't know how much further down they go. The answer is $13, but that's not a lot of option. But you can see, like, a company like the pool, that's at 298 is what the pool is at. There's a lot of numbers to go down. Those options are going to be more expensive, but there's a big wider range of like they go down. What did they go down today? 6% at 298 is $17 or something, like 18, $19 is what it was. So that's like almost $2,000 in option value when you own a put if they go past your strike price. So if they, it's a company like this that has another day like that, 20, $30, it's a lot of money in terms of intrinsic option value. So when you look at what to play, what to do to make the day exciting, a put on the pool company is an exciting one. Also, I always like, going against Facebook because they're at 133. And I do think they will eventually be $1. I think they are going the way of MySpace, and they will eventually be gone, even though they have their tentacles in a lot of different things. The metaverse is not a place. The metaverse is Zuckerberg admitting that Facebook has a bad reputation now, and they're still there. I don't call them metaverse. I call them Facebook because I want to remind him that I know who he is, and this company's going to one. So you can always buy puts on. So what else is there fun to talk about? Because I really enjoy doing these videos and going over everything. Like, I have so many views, opinions on what to do. Google's a great company. They're still hanging around that 100. There's the only problem with buying long calls right now, and kind of why it's safer to buy puts right now, is because of all the apprehension due to global conflict that is worse than normal. We usually don't have nuclear, war discussions in the news as if it might happen. Yeah, like that apprehension mixed with interest rates is overwhelmingly doing stuff like this, where companies are going down, right? So I don't know what the overall day was today. I'm trying to count, like, at what point did this thing turn positive? Because that's kind of your winners and losers. Even though we don't have a full stock market list of everybody on the NYSE and the NASDAQ, we have only the companies I want to follow. And it looks like 567 of them went down, and that leaves 150, I think, here that went up. So that's a pretty bad ascenders to decliners ratio there or whatever. It's like 1 to 3, I think, something like that. Point is it looks like it was more of a bad day. And I expect, unfortunately, until a lot of these more profound issues, you got an election coming up too. There's so much uncertainty that you don't get any kind of movement on the upside that's sustainable until at least after the elections, right? So that means the next few weeks, I would expect a lot of the market actually go in free fall. I didn't think about it like that. If you're waiting to figure out like where funding might be coming from, because there might be a change in Congress in the US, and a lot of these are American stock market, US stock companies I follow, then right now is actually it's a very uncertain time in terms of who is going to be in possession of Congress. And I think if the Democrats win the House and the Senate, that would be interesting. If it's split, I think that's better for the market. I think meaning like if like the Republicans have continue to have the Senate, right? They have the Senate now, but the Democrats get the House, where the Senate is even. Senate being even would be interesting. Point is there's a lot of apprehension about dumping money into anything right now, which is why long calls are unfortunately not a great idea with everything except for Tesla. You cannot sit on the sidelines with Tesla. I don't own any options on them right now. I'm going to buy some tomorrow. All mine expire. Like I do I'm not kidding around with anybody. I do exactly what I said in the video. If I said I'm going to do something, I do it, and I tell you. And I lost money on like everything I've done in the last couple weeks that I've tried this, but it's been over a week since I tried anything. So I waited for earnings because earnings are crazy, right? Well, they're way down. And like I said, if they hit like 200, that's insane. I'm buying an option. I'm buying an option that probably expires Friday if they go down to 200 at some point on Thursday, which they probably will, because they have no place to go but up. And then it just means Friday will be an update for them. Is probably what happens. If tomorrow is eventually an up day, I think tomorrow has to be kind of a down day, but the next day will be up. So you want to buy a long call on Tesla some point tomorrow, because that's probably the lowest it's going to be for a long time. I've said that to people before, and I think I've been right about that, because there's just a confluence of factors. And even although the market in its entirety could drop, and that could bring Tesla down a little bit. That's true, or even more than a little bit. So anyway, so back to, instead of taking something risky like even a long call on anybody right now, well, what about things we don't want to take? What about the puts? Like, what am I going to do tomorrow? Well, I'm going to look at pool and see how expensive those options are on pool, because that's a great one. That's the first time I saw them and read them was today. I'm actually going to put them at 1, even though that's not true. They're not a 1 company. They're not going down bankrupt. They're a profitable company. They're gonna have bad news coming about specialty orders in the future. And so that is going to drag them down, along with, remember, the rest of the market, which I think has days in it to go down, especially before the elections. So yeah, this is just, like I said, 250. What does a strike price cost on that? I'm going to look it up on my phone as we discuss a couple more things. And I said Facebook, but pool's better right now, because Facebook isn't a home builder. Facebook is a tech company. And even though they're going to also, I think, suffer from an aggregate downflow of the market, it's Roblox that I like going after, because they dump all their money in selling an admin. And I think that they're basically, I'll use my words carefully, they're a company that is out to make a buck now. And I think about all the ways that they like charged your kids and stuff, like stuff they didn't want to pay for in Roblox. They have their own economy of fake crap. They somehow convince you to do that thing where you pay $1.99 for something every other day when your kid asks you. I hate that. It doesn't cost them anything. It's just code. They're monetizing it. And those types of people also take all the money in terms of selling an admin costs as bonuses, because they're sneaky. And these types of companies don't make money long term, because they're not They don't have staying power because they're just one trick ponies as well. Even though gaming does get addictive, so that's why they stick around a little bit. But DraftKings doesn't have much in it. So yeah, so looking for home builders and shorting home building companies is also a good short-term thing to do. Yeah, and you can see them right here. Slow down, slow down. Had them at 25. They're down 5% today. Yeah, this stuff will continue over the. I mean, it has to, right? Because this is also symbolic of, like these are big time purchases and people that are signing the dotted line on a multi-year deal. Nobody wants to do that right now because there's too much instability just in the air, as well as timing. So anyway, that's the update. It's a long video, but for those who care about theory and economics and business and making money during the day when you're not messing around doing other things like betting on sports, doing all kinds of different ways to turn money into money. Well, one of them is trading stock options, and it really can be quite interesting and quite volatile. And there's a lot of theory involved in it, and it's fun to watch that play out, whether you're right or you're wrong, because there's just an inherent truth that starts to exhibit itself in the market. Meaning, if home buying and home building slows down, then home builders and home buying companies don't make as much money, and it goes from making a ton to not making any. And that's a huge change in the thought about the company, which is reflected in the huge change in the stock price. And that is just gauging where there are going to be overreactions and where they're going to present themselves is where you position your money in the proper direction, and you can make a ton. So that's the stock market review for the day. Good luck, everyone. May all of your trades be winning.